All right, welcome back. Recently in our sessions, we were talking about some of the principles that govern everything we do, and we were looking at this Friday's NASDAQ tick chart. So I thought I'd do a little bit on the three types of trades here, which can be applied to anything. You see here we can relate the three types of trade options related to gaps. Here's the three types of trade options related to swings. This is a framework. It's a way of seeing things once you understand how to mark gaps and how to mark swings. But what I want to get across is not a mechanical thing, but I want you to get an understanding, right? We have type 1, push trade. So let's say, for instance, the market is rolling like this, and if you've been doing your reviewing some of the lessons on the blogs about swings, you'll see we have a major swing and we have minor swings. Okay, so I'm going to use this as an example to try and get across the essence behind each one of these trades, behind a push trade, behind a type 2, behind a type 3. There's a feeling behind it, right? It's not just a pattern. So a push trade, right? It's called a push trade because it's pushing. So you see the swings are smaller. There's some momentum going on in the market. They're pushing the market, and you'll often see this kind of a thing either after a new high or even right after price pulls back. It starts doing these small swings like this, pushing, pushing. Why? Because they're in a hurry. It's a bit of momentum going on. This is just in two different contexts. So think about your own trading. You're up here, oh, I missed it, or it turned, I missed it, and it's pushing. They're chasing it up here. And so I'm not saying one trade's better than the other. I'm saying know what you're about when you're trading. Be able to make these distinctions. Know what kind of trade you're doing, right? Are you pushing a market because it's got a lot of juice to it? And sometimes the markets just do big loping swings, like breaking those minors, right? And so a push trade is going to be, yeah, I'm getting in right here on these little swings. So that would be a push. That would be you're pushing it. Or I'm getting in here on these little swings. That would be pushing it. Now type 2 is when these swings, say, expand, right? See, it's bigger, it's bigger, it's bigger. They expand. I call this expand, then continue. All right, so expand and then continue on its merry way. And a type 3 is when you go ahead and break, you come back, and it's an actual reversal. It's an actual reversal. And this can be applied to a line, it can be applied to a gap. So think about the market's coming down, they gap, they come right back to test the gap. If you take this short right here, you're trying to push this market down, right? With the momentum, you're trying to push it down. It's going down. You're trying to push it down. Sometimes it don't want to be pushed. Sometimes it wants to let a little air, create a little space before it. And that would be a type 2. And we all know that feeling when the market is just rolled and it's doing these little swings and we just hop on. And then we get pop, boom. So that's what a type 2 looks and feels like. Notice I'm going into the feel of these things. Think about it in your own trading. Ground it. Now sometimes, the market's coming down. It's doing these and you push it because it's got a lot of juice. And you push. And you also know if you're pushing it, you're a little worried, right? You're a little worried because the swings are getting smaller. The swings are getting smaller. You probably got your stops here, and this leads to a pop, and then carry on its merry way. Now a reversal is when it's actually reversing. Okay, it's expanded. It pulls back, and it's actually reversing. That's a reversal. Reversal over here is when it pops, comes back, and it's actually reversing. So to know what we're about with this is quite helpful. But there's a feel behind this. So let's look at this market here and show you recent things. So for instance, you can identify a major swing. It's got a pullback about yay big, right? And then we can identify swings on the way up. See, they're pushing, they're not pulling back this far. You can wait for it to pull, but they're not pulling back. They're pushing this thing. They're pushing, and then they finally expand, right? So this is we're in a hurry. We're just going to do these little bitty swings. So if you look over here, and again, I'm assuming you have the foundation of swing work. If not, go check out the blog. This is where, you know, price is swinging like this, right? And they're trying to push, right? It's coming out of the hole. They're trying to push this market up, right? This would be a pushing trade. If you took a trade somewhere in, you know, in this neighborhood, that would be a pushing trade, to keep pushing the momentum, right? It's coming out of the hole. So pushing trade, as you see, are usually associated with the miners. It's not quite working out here as price pulls back to its bigger swing, right? And so if you were using this and relating things to it, you would say, I'm going to do a pushing trade, or I'm going to do a type 2, or I'm going to do a type 3. And we can see type 2 wins the battle here. And it can be any line you draw. It can be a gap. It can be so for instance, it can be a multi-pivot line. See, you get the feel here. Push, 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 push. See them? They're squeezing this thing. They're pushing it. Sellers are hitting it. Sellers are hitting it. Sellers are hitting it. Sellers are hitting it. Push, push, push. Not a push. Possibly a type 2, or possibly a type 3. Now swing, swing. So you kind of get the idea behind how this is a principle, whether we're using gaps or if we're using swings. It really doesn't matter. So for instance, let's take this gap. If you're hitting this anywhere along here, you're pushing. You're pushing, right? You're pushing for this thing to make a new low, right? Look at these sellers. You're with the sellers. You're pushing. You're pushing. See, this is a good, clean way to orient yourself to a chart. And you already know if price pops, you can do a type 2 or type 3. And so that's pushing. That's pushing, right? You got this multi-pivot line. You have this gap. They're pushing. Okay, they've popped it. They've lost their minds. You can think about type 2s, which is just we're expanding. We're expanding this just to roll over, just to let a little steam out. Or you can think about type 3s, which is, yeah, this is an actual reversal. So that would be related to the gap. So maybe I'm going a little fast here, but I'm trying to get a feel across with all of this. So let's take it to Friday's market and take a look. All right, if you can do your swing work, you get a feel here. Okay, that's the major swing. And then these are, these are minors in here. These are minors in here. And so you can be pushing, right? You can be pushing along this line somewhere if you want. All right, this would be pushing. Why? Because it feels like it will never come back, right? It's like there's just so much momentum here. That's what a push trade feels like, momentum. And that's your judgment, and you have to study the context. The context will be different in every single day. You can't step in the same river twice, so don't try and make a system. So we see the push didn't work, and right away I know where a type 2 would fall. It's going to be somewhere down in here. Generally what I do with these things is I'll double them out like this. And so that's describing the type 1. It's a projection for a type 2. But in this case, it's not a bad projection, right? Something like this. And then this would be a type 3. Anywhere along this line, actually, right? Anywhere along this line. So in this option, you can push it to keep making these little swings and keep rocking and rolling, or you can wait to let it take out some juice. I'm not telling you which one's better, which one's worse. There's an appropriate place for each one. First you can identify them, then you can figure out what you need to do or what tendencies are. It doesn't matter what time frame. Now, and that's the close. That's where we've closed. So you get the idea. Type 1, to push for the momentum. Type 2, they're just going to freak everybody out, stop all the pushers. I call these the cheap seats. All the pushers, and rock and roll. And then type 3, where it's actually saying that there is a reversal. So this would be related to swings. And quickly, you can come in here and relate it to gaps the same way. So if we have a gap, right, wide range bar, bigger than the last 3 bars, space between, mark it out in the upper third. You can see via a gap, if you sold it, it'd be a push. If you sold it up here, it'd be a type 2. If you buy it, that'd be a type 3. So this would be a place I'd probably be looking for a type 3. Woe to anybody who's been selling the NASDAQ these last few weeks. Good luck to you. Just watch price. Forget all of what you think and feel. Just see what price is actually doing, right? But each one of these things has a certain experience to it. And so that's type 1, type 2, and type 3, and we can see them related to gaps. And this is just such a beautiful example of how these often unfold, and can include your action reaction lines, center, action, reaction. But as a principle, these 3 types of trades can be applied or related to any particular structure you're looking at. Don't try and do them all at once, but it can be related to whatever you're doing, because it's an underlying. It has to do with swinging, and effort reversed. And so practice seeing them on your charts. Use gaps, use swings, whatever. Practice seeing them on your charts. And then when you trade, know that you're trading for the momentum, or know that you're trading for, okay, I'm trying to get this bigger swing, or know that you're trading for a reversal. Once you know those three things, and you can apply those three things to any of your trade, you know what you're about, right? Your trading will improve just to know what you're about. All right, so everybody have a, if I don't do another blog here, everybody have a Merry Christmas, Happy Holidays, whatever you celebrate, and we'll see you next